Okay, perfect. Thanks, guys. All right. Today I'm going to be covering the monthly trade that I do. And actually, this was my introduction to credit spreads, probably around 2014. No, a little earlier than that, but 2002. Actually, no, not that far. Um, it was about 2012 when I started these, and uh, this is actually the best trade for credit spreads, just because you have such a wide way of managing these trades. And I always say that it's a career trade, just because when I was you know doing in my career in with tech, um, I use this trade pretty much every day, and it really allowed me to get a ton of premium and money, and it's probably the best trade other than zero DTE for trading. Okay. All right. So with that, let's get started here. So I am going to what you're going to expect. Um, I'm going to show you how to make consistent returns daily, based on margin capital at risk using SPX monthly high probability trades. Okay. And so what are you going to learn today? Know when to enter a monthly expiration trade. Number two is learning when it's time to exit and take profit. Determine when to best apply vertical or iron condor strategies. How to correctly adjust threatened monthly expiration trades, and how to correctly adjust threatened trades. And that's really important. And how to earn multiple premiums within 1 month. All right. So with that, I'm going to have a bonus with you and give you a bonus. And so stay with us till the end. Also, I will provide information or questions for you guys, and just so that you can hold them till the end, and then I'll answer every single question that you have. Okay, so write it down if you want, and we'll get going here. Okay. All right. So first thing is, why are you here? Number one reason I would say is that you're interested in learning new strategies that will take your trading performance to the next level, so that you can finally leave the career, 9 to 5 career behind. Number two, you've read about others making money trading, and you know that you can do it too. You're just not seeing the account grow fast enough. And number three is you tried different trading strategies that you thought, okay, this is it, only to discover that you're just not getting the place for getting consistent results. All right. So with that, with a show of hands, what category are you guys in? Number one, interested in learning new strategies. Number two, desire to see your account grow month after month. Or number three, the right strategy that provides consistent trading results. Okay. So with that, if you are there, let me know. That would be great. Okay, three. Great, all three. Perfect. Okay. All right, great. All right, so let's get going here again. So I'm a regular guy, and I love to trade. It was really my passion for, uh, after I left IBM and started working there. And this is my family. and just a regular guy again, and my parents, and that was an MBA program that I was in a long time ago. All right. Okay, so let's talk about mindset. Okay, now imagine what it would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow. Number two is becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan that is profitable over time, allowing you to grow your account month over month, right? Obviously, that's perfect for everything that we do, okay? So SPX, what is it, okay? SPX is an index that shows 500 largest American companies, okay? You can't really trade it, but you do options on it, okay? And that's what we're going to be doing, all right? Okay, so let's go through this real quick. Okay, SPX benefits, time decay is number one. Number two is high probability of success, right? Because credit spreads offer much more success because all you have to do is stay in a range, and if you're in that range, you'll always get a profit on it. Okay. Then there's other opportunities for when you get threatened, and we'll talk about that as well. Okay. These are non-directional strategies. All right. And these credit spreads require, you don't have to have that market direction just as long as you're in that range, right? Okay. All right. So what exactly are credit spreads? All right. So here's how it works. So first you select two option contracts, right? You get a short, which is a sell option, and a long or a buy of an option. And it's either a put or a call. These options have the same expiration date, but different strikes. Okay, and that's really how it is. And then they're called verticals. Okay, the short option is sold at a higher strike price, while the long option is purchased at a lower strike price. So this creates a range between the two strike prices, known as a spread. By selling the short option, you receive a premium up front. So you get that into your account, and that's your initial credit. This credit represents the maximum potential for that trade. So in other words, if we'll talk about that. So once you put on this trade, it doesn't go higher. Okay, it just stays there, and the time decay reduces it so that you'll get a profit. So the first thing you need to do is you need to select option contracts and put those on. All right. The short option is sold at a higher strike price, while the long option is purchased at a lower strike price. And so again, that creates a range. Okay, so let's move on here. Okay, so trading credit spreads. So below is the format for the TD Ameritrade execution here. So the first thing you do is you sell a contract, and and then in this case it's called quantity one. The type of position is called a vertical. So when you have two positions, one on the call side and one on the put side, it's an iron condor. Okay. The underlying asset is SPX. The multiplier is 100. The expiration date is, whatever this is, that particular day. And the exercise type is European, which means that you cannot, the market will not exercise your position, right? You have to do it manually. And so so that's one thing that you can do. So you can be out of or in the money and still obtain that position. Okay, so here's the long strike and the short strike. Okay, or this is the long strike, and okay, and this is the option type, which is the call. So you have the short strike, the long strike, and then the option type, and then the limit order for $1, let's say. You're basically collecting that money up front. So if you take that $1 times one contract, which is $1,000, okay, in this case, because you're having 5350, 5360, which is a 10 wide contract, okay, and so you multiply that by 1,000 for one position. Now you go for the put side, and it's basically the same, only it just becomes an iron condor. Okay, so that's basically what an SPX credit spread is, and they do go in different variations, right? But I like to trade with a 10 wide position, and you collect these both of these positions, and also what it is that you don't have to, because the put and the call are different, and they will not exercise at the same time. uh, you know, you putting on a trade for $1,000, and then you put on the second trade, and there's no commissions for, not the commissions, but there's no margin for that. So that basically that's free margin. Okay, when you put it on both sides. Okay, so the margin requirement for this is, in this case, is $1,000 minus 100 minus 115, right? So you have these positions, and the cost for this placement is $785. It's because you're getting that credit as well. Okay, so that's how the math is. Okay, so remember, excuse me, if you have any questions, just write it down, and I'll answer all your questions that you have. All right, so one of the greatest things for options are the time decay. Okay, so let's talk about that. From so options are always decaying. Okay, always decaying. So when you put on an option, if you pay for the option, that position will constantly be moving down, okay, until it decays all the way down to zero. Okay, so in this case, these are call options, and from 68 days to 33 days, the rate of decay is 34%. From 33 days to 5 days is 57%, and from 5 days to 0, from 5 days to 100, basically it's 100%. Okay. All right. So let's see. We did this already. Sorry about that. Okay, let's go. Okay, so let's go into the entry exit guidelines. All right. So the best way to that I've traded with these contracts is that you put on a 10 to 12 delta, which is mostly attributed to a 10%, 10% that you're going, or 90% that you're going to get the premium paid to you. All right. And you can space these from nothing to very wide positions. Okay, and I use very wide positions so that we have the ability to get that profit most of the time. Okay, and if you don't get it, there's ways to adjust the position so that that you will get it eventually. Okay, so in this case here, I use a 10 to 12 delta for the put side, and I use a 7 to 9 delta for the for the call side. All right. So the premium that you get in this case, from 60 to 80. In this case, usually I use usually I go to $1. Okay, um, so for this could be a 5 wide position. I'm sorry, for a yeah, a 5 wide instead of a 10 wide. But in any case, what I do is I use um, I use a 10 wide position, and that's really the sweet spot for me. Okay. All right. So when do you take profit? I close the trade at 10 cents most of the time. However, with these positions, you can close them between 50 to 80% credit received. Okay, and it's really that's really a very, very conservative way to manage it. Okay, so at expiration, it's another way to close it. Close the position, and don't allow a profitable trade to turn into an unprofitable trade. Okay, because once you're in, you can't manage. You can manage it, but the best way to do it is to have a profit and move on. Okay. All right. Exit, adjustment, or roll. Right. Before the position, goes much closer to that range, right? That you have. You want to adjust that trade, and I'll work. I'll talk more about that, about managing that in a second here. The other part is a stop loss. So many traders use stops with 3 or 4, with after 3 or 4 adjustments, and then you let it go. But typically, from the years that I've been trading these, it's very, very easy to adjust the trades and move on, and then you know and then get that profit in. All right. And yes, I have rolled trades, several times. But I adjust those trades with financing it with a different position, and we'll talk about that now. Okay. All right. So these are old positions that I've used for years, but it's the same thing with managing these trades. Okay. So this is a position here where when I put on the trade, and this and even if it's a long time ago, okay, I put on this trade. When you put it on, the delta in this case is 35, and so these positions are these 5 wide, I think so. Yes, these are 5 wide positions. Okay, and so I collected 35 cents on these positions. And you can see here for the put side, the range is much larger than the call side. Okay, and this is very, very typical of that. And so when this position gets threatened, and this is what happens, and so the market, let's say, goes down, right? So your position here goes to 5 cents, and the other side of the position goes to 90 cents. Okay, and that's very typical of what happens. So when the market moves down, in this case, or up, you're going to have to adjust that trade. So how do we adjust it? Okay, first is you buy the position that's not threatened. Okay, you close that position first. Now you can roll that position both sides, but you have to use you're going to have to use more margin in order to do that, because you have that position there, and the margin doubles. Okay, when you go there. So what I do is I close that position, and then I roll that position. So in this case here, we have the 5 cent and the 90 cent. Okay, and then what I would do here is I would sell the January position and collect 90 cents. So you have a debit of 0. And then the vertical here, what you do is you place that position from 24. I'm sorry, from 24.15 down to 2015 to 24.10 to 23.40, 23.35. So that way you get a not a credit, but basically you know, a level there that you know, that you don't have to pay for. Okay. So then you sell the 18 position. I'm sorry, 18 January position, and you collect 50 cents on that. Okay. So you have a credit basically of 45 cents by rolling that position. So the adjustment here minus the commissions is 45 cents. So you're actually rolling the position and collecting an additional premium for rolling this trade. And the premium collected at expiration would be $1.15. Okay, just for being able to roll that trade. Okay, and then when the adjustment is done, you can see here that everything goes back into that range, so that you're able to manage that trade and continue, you know, with the process of trying to get that premium collected. Okay, all right. So I'm going to share with you real positions that I've had. Okay, and I used it for several months. Okay, in this process, and this is basically how this worked when I did these trades, you know, several years ago. Okay, but again, I do the same thing every single day here. Okay, with these trades, and nothing has changed for how to manage these. All right. Okay, so let's go through this. So now I'm going to sell a 5 vertical position. Okay, and in this case here we have 10 wide, right? 34.25, 34.15. So we have a 10 wide position, and you're collecting 85 cents. Then we put on a another position. So let's see here. So we collected $150, and so now we're putting on another put for 55 cents. And a call for 55 cents as well. Okay. So these positions here have the same expiration, and you can see the premiums here. Okay. Now I go down and I collect a 70-cent put here, and then I close that trade for $300. Now I put on a new position, 65 cents, and a put position for 65 cents. And then I close the position for 10 cents. And now we have another position that I closed for 35 cents. And then I put on a new position for 55 cents. Okay. So you can see here we went through January and going through February now. Okay. So now I close the position for 15 cents. So when you see here a negative and a positive, the positive is you're closing the position, and you're basically allowing yourself to collect that money, you know, and for the premium. And now I close the position here for 10 cents. All right, so now we're going into the next okay, so we collected here from January to March $1,025. Now keep in mind, when I started trading, I started trading with five positions. At the height that I've gone through, I've traded 400 positions, and it's the same thing as doing it what I'm doing now. Okay. All right. So now we got we have actually put on a condor. Okay, here between these two, and now we close that position for 10 cents and put on a 6 contracts this time for 75 cents. And then we close that position for 30 cents. No, sorry. We sell to open. Okay. Actually, we rolled this position. So now you can see this is where we rolled that position. Okay. And it went from 37.75, 37.65 to 36.75 to 36.65. Okay. And we collected 30 cents on this. Okay. Then we closed a position. Actually, no, we actually added 30 cents or a 3 position, and then added. We closed the position for 10 cents. Okay. All right. Now we have $1,700 minus commissions, and so now we're putting on a 45-cent position for 6 contracts, and we have that 3 contract position here for 55 cents, and then we closed one position and sold another position here, and then we had a roll again here, and we basically collected 20 cents here, and then we closed that position for 5 cents. And now we have another position that we closed for 5 cents on the put side. Okay, and now we have $21.50. Right now we are getting to the end here. So now we have 7 contracts at 65 cents. And then sold 3 verticals for 45 cents. And now we put on now we close the position for 30 cents. And then we collected, we got another 3 contracts for 60 cents. And then open a new contract for 7 contracts. And then we ended up with $23.95. So basically from January to May, we collected premiums of $2,300 and using up to 700 or 7 contracts on this. And these are actual trades that I made during that period of time. Okay. All right. So now The question is, would you like to follow these trades while you learn using short-term strategies? And monthly strategy is basically a short-term strategy. Okay, and of course, it's easy. Okay, it's just a process of doing this. Okay, as long as you manage it correctly. So you saw that I had a couple of adjustments that I had to make in order to keep the premium going. Okay, and that's how it works. All right. So we talked about interested in learning new strategies, the desire to see your account grow month after month, and find the right strategy that provides consistent results. Yes. Okay. This works. Okay. All right. So the question is it time to break those barriers, right? Will you keep doing what you're doing and hope that you one day that you're going to stick, with something that works, or are you going to finally take the steps that'll take you to a place that works over and over and over again? Okay. And it's not, this is not easy, right? Getting expertise, going in there and trading and doing the right thing, takes time and it takes expertise, right? But you have to have a no quit attitude, commitment, discipline, and having an edge. And then that edge, there's multiple, just because all you need to do is manage a position that's in a range, not let it go in the money, but adjust it. And then what happens is you collect that premium over a month, or maybe 2 months or 3 months, just to manage it, so that you'll collect that position, or collect that premium in the end, right? And that's really a way that you can have success in trading these types of positions. So I trade 0 DTE, I trade 7 DTE, I trade monthlies, and I can tell you monthlies are the best position that you can take, based on the fact that it's very conservative. You have plenty of time to manage the trade, because you're basically doing a monthly trade. Okay, and so you have a lot of ways to manage those positions so that it won't threaten your position. Okay, because threatening those positions and going in the money, you're gonna lose money. Okay, but if you manage it correctly, you'll be very, very fine. Okay, so we have a trade alert service, basically, that has one-way communication and two-way communication. Okay, so we have traders that are in our service, and you can ask any questions that they have about adjustments, about anything. And also we have live traders in there that trade for a living. Okay, and they're very, very successful traders, and just love to trade with us. And we and those guys, they ask questions, they give you answers, and then you'll continuously learn by what they do, and make money. Okay, and this is how professionals work. Okay, and it works. Okay, so we have channels that have trade alerts that provide very, very specific information, and when we put on a trade, it comes through my account, and in between 30 seconds here, the position comes out, and you'll be able to see it and put on that trade that I traded as well. Okay, so we also have a lot of trading success stories. Okay, that have been around. These guys, most of these guys have gone just because they've learned something, and they're trading on their own. Okay, so my guarantee, okay, if you subscribe for 1 month and lose money by following my trades, I will refund your subscription by $1.25. And I have never ever been able to give them that guarantee, or I mean, I haven't been able to give them that, because they make money the first time. every month. Okay. All right. So here is our subscriptions. We have a free from the positions that we have. So we share some of the positions in there. Okay. And then the paid plan is from 79 to 199. Okay. And if you are if you want to join the positions, the subscription is going to go away on Sunday. All right. And the reason for that is because we open the position, we open up the subscription and wait for people to, they come in during that period of time. And then once we close, which we close every we open the position, we open up the subscription, and we keep it open for 2 weeks. And once we close it, we close it. Okay, there's no more. And the reason for that is because people come in, they get all the questions answered, and it takes about 2 weeks to acclimate everything, because there's a lot of activity in the subscription area. And and we close it at the end. All right. And so every 3 months we open, and now we're in a place where we have it open, and we're going to give you $20 off for life by subscribing if you want to. Okay. All right. So let me give you the offer here, and okay. So you should be able to see that now, and now I can let me go through a little bit more information here. Let's see. All right. So if this is for you, you want to learn a step-by-step process to gain income in a market that goes up and down. Number 2, you want to finally break those series of losses. And number 3, you want to earn consistent income that sets you apart of other traders. This is it. Okay. You have an opportunity here to get $20 off for your subscription by joining. It's not on a wait list. Okay. So we're not on a wait list. We're actually open right now. Okay. And we get professional traders with subscribers, and we have the chat groups. Okay, we have training and education channel filled with great content, automated signals within seconds of the trade, and trade entry, fill price, adjustments, price target after fill, and my guarantee that you will make money. Okay. All right. So with that, questions? Do you guys have any questions? Let me go to the chat here. Let's see here. Okay. So I didn't do that. Oops. Chat. Okay. Anybody that has any questions? Are we good? Oh, what's the win rate? Let me see here. We have it in the let's see. Oh. Hold on a second. Let's see. Yeah, the win rate for the win rate for monthlies are about 80%. Okay, let's see here. How do I determine the number of contracts to purchase each time? I have let me see. I have a for every 10,000 of margin limit, let me see, for monthlies, 10K of additional capital once you reach 30,000. And so basically you want to trade one contract for every $10,000 that you have, okay? What's the win rate? It's about 80%. Do you decide? Okay. So for the SPX trades, we started at 25,000 and year-to-date returns are 17,000 for for 2025 so far. It's it out of all of the win rates for these, the monthly is really the most lucrative for the trade alerts that we have. I always put on, James, I always put on a vertical and then another vertical when I place the trade. I don't put them on just because sometimes I like to wait a little bit to get a better premium, but I do it with verticals. Will you show an example of how to trade toss newbie here? Okay. Yeah, we have we do have a we do have what do you call it? Learning materials for you to learn how to do that. Okay, and so and I do have a YouTube channel that I have, and you have all the education that you can possibly have with that. Let's see here. How do you adjust phases like Liberation Day? Oh, it just skips. The market just skips when you when something goes through there. So so days that the market is not open, basically you're not trading. When you do monthlies, do you stick to monthly options cycle expiration? Right now, there is the AM expiration, but that's going to go away. The AM expiration is going to go away, and so right now I'm transitioning over to just regular daily trades basically, and just because it gets complicated with the AM expiration, so I'm moving over to just normal daily expirations. I'm actually transitioning more right now. I usually do 2 or 3, but I'm actually going to start doing a lot more, just because the win rate on these are very, very good. And so I'm going to actually be trading the monthly trade much more than I have been already. So I cut down on 0 DTE. And cutting down on 7 DTE and moving more into the monthly trade. And so once you get into the monthly trade too, obviously, the first time you put it on, you put on a monthly. And then what you can do after that is a week later, put on another monthly. And a week later, you put on another monthly. And that's actually what I'm proposing to do at this time. Okay. And the reason is because they're so easy to manage, and there, there's really no stress on managing these trades, right? Let's see, anybody else? Any other questions? Absolutely, yeah. These positions, you can close these positions at any time. So just because it's the European model, you and they're cash settled, you can close these positions whenever you want. All right. Any other questions? All right, guys. Thanks. We have monthly subscriptions and we have annual subscriptions. Obviously, the annual subscriptions are a lot less based on the monthlies. But but if you join with an annual subscription, you have to stick to an annual subscription. Just because of the dollar amounts. So you guys should have a link to access. I think the offer's open already. Yep, it is. And if you have any questions at all, just send me an email at al@simpleoptionstrategies.com. And you can upgrade to if you start with monthly, you can upgrade to yearly subscription as well. Okay. All right, guys. Thanks. I appreciate your time and value your time. And if you have any questions at all, just reach out to me. I'll answer all your questions, and we'll talk later. All right. Thanks, and have a great day. Now, make sure if you want to stay, if you want to stay with the subscription, we close it out on Sunday evening. All right. All right. And anytime from there, just give me a chat, and we'll talk. All right. Thanks, and have a great, awesome day. Bye bye.